Next topic is investment avenues. The investment avenues can be broadly categorized under the following heads: corporate securities, deposit in banks and NBFCs, UTI and other mutual fund schemes, post office rates, life insurance policies, provident fund schemes, government and semi government securities. We will move to all these particular subheads one by one. First, we will talk about the negotiable securities, under which the first heading is variable income securities, and first part of variable income securities is equity shares. The equity shares attract the interest of many investors. In the early 90s, the stock market was the best and safety place for the common individual to invest. This made the retail investors to turn away from the stock market. The stock market, or we can say the share market, classifies their shares into five different shares: the growth, income, defensive, cyclical, and speculative shares. First, we will talk about growth shares. The stocks that have higher rate of growth than the industrial growth rate in profitability are referred to as the growth shares. For example, if we talk about the telecommunication industry, and we assume the telecommunication industry has a growth rate of 10%, but one of the telecommunication companies such as the Reliance Jio has a growth rate of 12%. That means Reliance Jio shares is the growth shares because it has the higher rate of return than the its corresponding telecommunication industry. Now the income shares, these stocks belongs to companies that have comparatively stable operations and limited growth opportunities. That means they are going to provide the stable or the limited return for sure in future. The bank shares and some of the fast moving consumer goods stocks such as Cadbury, Nestle and Hindustan Lever may be termed as the income share because it has the stable growth in the market. Next, the defensive shares. These shares are relatively unaffected by the market movements. The pharmaceutical industry, owing to its inherent nature of demand, is not affected by the downturn in the economy. As we are all aware about the COVID-19 situation, then in this particular situation, critical situation or pandemic situation, only the pharmaceutical industry is that which has a growth rate of which is showing its positive feedback or positive return. So this is the defensive shares. If we had invested in this particular sector, that means it will going to provide you the return. The chances of risk is also there, but the chances of return is higher than the risk. Cyclical shares. The business cycle affects the cyclical shares. The upward and downward movements of the business cycle affect the business prospect of certain companies and their stock prices. Such shares provide low to moderate current yield. Capital gain may be highly variable. For example, the automobile sector's stocks are affected by the business cycle because in some time they are at the boom, but at some time they are also at their declining phase. So as per their business cycle phase, their shares value also changes. Last is the speculative shares. Shares that have a lot of speculative trading in them are referred to as the speculative shares. During the bull and bear phases of the market, this types of shares attracts the attention of the trades. When the shares is in the bear phase, all of the investors trying to purchase this type of shares, but when the market moves toward the bullish phase, all types of investors going towards to the selling the speculative shares. The stocks which fall under one category in one period may switch over to another in another period. Next category under the negotiable securities is the fixed income securities. First is the preference shares. These shares are no longer regarded as inferior to the equity capital. High tax paying companies or investors prefer to subscribe to the preference shares, and investors with a low tax burden would prefer to go in for debt instrument. The conversion options provided in the buy preference shares also make it attractive. That means preference shares has the good option of the conversion. The biggest advantage is the tax exempt status of preference share dividend. That means if we are going to purchase the preference shares in any companies, that but the income we receive from the shares is the tax exemptable. Next is debentures. Corporate debentures are an option available to the investors who are sacrifice liquidity for higher return. If debentures are not actively traded in debt segment of the capital market, the investor may have to hold the instrument till the maturity. Next is bonds. All of us might be aware about the bonds as they are similar to the debentures, but they are issued by the PSUs. The value of bond in market depends upon the interest rate and maturity. Here we name the interest rate as the coupon rate which every bonds offered. The coupon rate is contractual involving the terms and conditions of the issuance of the debt security. Next is the IVPs and KVPs. These are the savings certificates issued by the post office with the name Indra Vikas Patra and Kisan Vikas Patra. The IVPs are in the face value of 500,000 and 5,000, whereas the KVPs are in the denomination of 1,000, 5,000 and 10,000. The funds parked in KVP with effect from the July 1, 2019 will double in 9 years and 5 months instead of 9 years and 4 months. The ministry or the finance ministry has changes this Kisan Vikas Patra rules 2014 recently. Next is the government securities. The securities issued by the central state government are known as the government securities or gilt edge securities. As government guaranteed securities is a claim on the government. It is a secured financial instrument which guarantees the income and capital. That means if we are going to invest in the government securities, then it is for sure we are going to return, but the risk is very low and the return is also very low. Last is the money market securities. Money market securities have very short term maturity, say less than a year. All of these investment which invest for the less than 1 year, all of that particular investment are done in the money market. We can invest in treasury bills, commercial papers, certificate of deposit, federal agency notes, short term tax exempt, bankers acceptance, repurchase agreements and call money. That was all about the negotiable securities. Now we will talk about the non-negotiable securities. First is the deposits. Deposits earn fixed rate of return. All of us are very much aware about the FDs and RDs which we open in the bank's accounts. So even though bank deposit resemble fixed income securities, but they are not negotiable instruments. Some of the deposits are dealt subsequently. There are three kinds of deposits. First is the bank deposits. It is a simple investment avenue option for the investor. He has to open an account and deposit some amount of money in that particular account. Traditionally, the banks offered current account, savings account and fixed deposit account. Next kind of deposit is the post office deposits. Like the banks, post office also offers fixed deposit facility which are in the form of monthly income scheme. Post office monthly income scheme is a popular scheme for the retired people. Next is the NBFC deposit. In recent years, there has been a significant increase in the importance of the non-banking financial companies. The NBFCs come under the purview of RBI. The amendment of RBI Act in Jan 1997 made registration compulsory for the NBFCs. Next category is the tax sheltered saving schemes. The tax shelter saving schemes are of great importance to the investors in tax paying categories. The tax shelter saving schemes offer tax relief to those who participate in their schemes according to the income tax laws. The important tax shelter saving schemes are PPF, National Savings Scheme, National Savings Certificate. Next category under the tax shelter saving scheme is the life insurance. Life insurance is a contract for payment of a sum of money to the person assured on the happening of event insured against. For example, if we take an insurance against the death or a accident, so whenever the death occurred or the accident occurred, then only we are going to claim the insurance against that particular event. Usually, the contract provides for the payment of an amount on the date of maturity or at a specified date at periodic interval, or if unfortunate the death occurs. The contract also provides for the payment of premium periodically to the corporation by the policyholders. Life insurance totally eliminates the risk. Next category is the mutual funds. Investment companies or investment trusts obtain funds from large number of investors through sale of units. We invest in the in units of mutual funds, and when we want some funds, we can sell that particular units. The funds collected from the investors are placed under professional management for the benefit of investors. Mutual funds are basically categorized under the two heads, that is the open-ended scheme and the closed-ended scheme. Next category is the real assets. All of us are very well aware about the real assets. There are different categories under this. First is the gold and silver. For ages, gold and silver have been considered as a form of investment. They are considered as best hedge against inflation. All of us knows if we are going to invest in the gold, then the prices of golds are continuously rising. That means this is the good investment opportunity to invest for getting the higher return, but it takes time as the gold prices would increase in the future, and it will take some time. Next is the real asset. Real estate market offers a high return to the investors. The word real estate means land and buildings. There is a normal notion that a price of real estate has increased by more than 12% over past 10 years. The population growth and the exodus of people towards the urban cities have made the prices to increase manifold. Next category is the art. Paintings are most sought after form of art. The price in the art market are rising, and this rise is expected to continue because the unique painting or the sculpture painting are very much in demand, and the prices of that particular art is continuously rising. Next is the antiques. In Western countries, investment in antiques is more common than in India. We can see this types of investment in antiques in the films industry only. The antique is an object of historical interest. It may be a coin, sculpture, manuscript, or any other object of olden days. The owner of the antique has to register himself with Archaeological Society of India. Then only he or she can sell out his unique or antique item to the customer or public. Thank you.